for above. In today's session, we are seeing EURUSD holding above the 1.17 level, and I feel looking at its price action for the session so far, we can expect a retracement and it eventually can try to climb back towards 1.18 level. So here, this possibility is there, and we will see if there are emerging trading opportunities which can help us exploit the emerging scenario. If we consider the data rocket for the day, we have plenty of data releases for the day. Earlier in the day, we got China's PMI numbers, which were in the expansion territory, both for the services sector and the manufacturing sector. Later in the day, for the euro area, we got the inflation numbers, and here, as the expectations were, these are quite higher compared to the prior month, now at 1.3%. And these are first estimates. So we did saw some uptake in the euro USD after the inflation data came in, and I think this is in line with the expectations. As I said, we have seen the rise in yield precisely because of the expectations of the inflation picking up, and now that is showing up in the numbers as well. Later in the day, we got the ADP numbers for the private sector job creation. And for the month of March, the job additions are more than 500K, which is the highest for last 6 months, and that shows the resilience of the US economy. And as the vaccination pace has picked up, we are seeing more and more sectors of the economy are opening up, and particularly the sectors which were hard hit in the pandemic, like the tourism and the services sector, are also showing the signs of getting back on their feet, not to the full extent, but still we are seeing robust growth there, and as a result of that, job additions have touched this 6 month high. And on the political front, we are awaiting the details of the Biden administration's multi-trillion plan for the revival in the US infrastructure. So this will be in addition of the earlier past fiscal stimulus of 1.9 trillion. So I think this is going to be a massive factor for the market also moving forward. And as the administration has given the hint that they will be spending on the infrastructure asset creation like highways and other long-term assets. So we will have to see how this plan shapes up, and it is going to, of course, add to the fiscal stimulus which is already in place. In the commodity segment, we got the US WTI crude oil inventory data, and here, contrary to the expectations of the inventory build-up, we are seeing drawdown for the last week, the week ended 26th of March, of around 0.87 million barrels. And as I said, this is contrary to the expectation. Even the last night's API crude oil inventory was showing the rise, but now for the EIA data, we are seeing the drop there. And I think this is likely to support the crude oil prices in the near term. And as I had talked about the possibility of a upside momentum picking up in the light crude oil prices in yesterday's session, we can do look for the trading opportunities there as long as light crude oil prices are holding well above the crucial mark of price level of around US 60 per barrel. Now let's move on to the technical segment. First, we will see what's happening in the Euro USD and some of the key levels to watch out for as the session progresses. And also, we will see the breakout which is happening in the Nasdaq about the 13,000 mark and how this changes the near-term outlook. Let's start with the Euro USD technical outlook first. This is the daily time frame chart, and here, as you can observe, the Euro USD has been sliding downhill for more than a week now, and it has gotten closer to the Fibonacci expansion of its prior decline. And I think on these levels, we can expect actually some sideways momentum. So here we are purely looking from the short term perspective, and there are still no signs of a trend reversal. But the retracement is quite possible looking at these overstretched price levels, and because of that only, we will be looking at the opportunities to trade as long as the immediate low established around 1.17 holds. So if we consider the lower time frame charting of 4 hourly, we have this regression curve which is still inclined on the lower side, and the price action in the day so far has been able to hold above 1.17 after buying momentum which we saw in the initial hours of the European trading session, and that has been providing the near-term support. And even after the start of US session, we are seeing fresh uptake, and it has pushed the USD closer to the 1.175. And I think if these levels hold, we are likely to see the further uptick in tomorrow's session. So we will see if there are any optimum trading opportunities which we can exploit. If we consider the pivot point series, there is not much we can use apart from the fact that we can expect the 1.180 level to act as the resistance in near term. So moving back to the even lower time frame of hourly, we can utilize these 50 SMA as a near-term marker. So as and when the Euro USD price is above that, we can be fairly confident of the continuation of this retracement, and we can utilize this as our desired entry criteria. And as I said, we are indeed seeing some fresh momentum after the start of US trading session. If I think in today's session we see that Euro USD is able to hold above this 50 SMA, then in tomorrow's session we can expect further move on the higher side towards this prior swing high. So keeping that in mind, we will need to capitalize on this situation, and for that the basic requirement is going to be that we will be looking for the buy trade only when the Euro USD is above the 50 SMA level, and on the on the lower side, we can utilize this immediate swing low as a cutoff. So if the Euro USD breaks below this, then I think it will be better for us to move out of the trade and sit on the sidelines for further consolidation. But if we see fresh momentum building up and pushing the Euro USD higher, then I think we can look for the entries anywhere closer to this immediate swing high with a possible move towards 1.18 or thereabout. So that is going to provide us the risk reward ratio of closer to 1 is to 2 also, if we are fortunate enough to get the entry anywhere in the price band of 1.174 to 1.175, of course after due consolidation while keeping the stop loss just little closer to the price level of 1.172 while targeting the price area of around 1.18 on the higher side. Now let's see on the technical front for the Nasdaq. This is the daily time frame chart, and here after consolidating for last couple of sessions, we are seeing fresh breakout happening in the Nasdaq above the crucial level of 13,000, and that indeed changes the picture. As I had talked about the breakout on the upside in Monday's session, which we were anticipating that didn't really materialize, but it has happened today, and I think because of that we can now look for the buy side trade with much more confidence compared to the earlier. And now we can expect a fresh break above even this immediate hurdle of the central pivot point, which is there around 13,150. So that might happen in today's session, or it might take a couple of sessions more, but the possibility is quite strong now. If we consider the regression curve, it has also now inclined on the upside after this consolidation, where we have seen the formation of higher lows, and that has helped the regression curve to incline on the higher side, even though the price action still remains in the lower band of this regression curve, but if the momentum picks up, it will not take much time for the things to change. And on the pivot point series, we are going to get the new series starting tomorrow. So in today's session, that central point area of around 13,150 might immediately grow as a hurdle, and we might see price gain being capped for today's session. But now, with the new formation coming in place tomorrow, we are likely to see much more conducive environment on the technical side for the further uptick in the Nasdaq. So keeping that in mind, I think we can use this confluence area of 50, 100 and 200 SMA to act as a decisive marker in near term, and we can continue to look for the entries anywhere closer to this breakout area of 13,000. Even in today's session, if we are fortunate enough to see some correction, and thereafter we can look for the fresh entries, but that will be pretty difficult as the things stand right now. But in the market, you never know. That's why I have used the word fortunate enough. So we will have to see if we can get the entry anywhere closer to this. If earlier in the session, if you had indeed got involved in the Nasdaq closer to this breakout level, then I think you might be sitting on good amount of profit, and you can hold on to it and expect this rally to run even higher towards 13,200 or even above those levels. So here the fresh entries are working out above this 13,000 mark, while keeping the stop loss anywhere closer to this confluence area of around 12,900. And as I said, on the upside, we can expect the price levels of even above or beyond the 13,200, thereby giving us the risk reward ratio of 1 is to 2. And with this, I'm also done with the technical analysis. And if any of you have any idea or any query to share, you can write to me in the feedback section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Till then, goodbye.